Okay, now this is the employer side of the expense for payroll tax. It can get confusing, so just take a deep breath, okay? So, not only are deductions taken out for the employee, which is what we just did in this one. Here. We did this entry. There will also be an additional entry, okay, that will only be paid by the employer. And these are called payroll tax expenses. Employer payroll tax expenses. They usually involve FICA, Social Security, FICA Medicare, federal unemployment tax, and state unemployment tax. There can also be maybe workman's comp, maybe added into there. You could have insurance, if you pay insurance. There could be other types of credits that could be considered payroll taxes. Maybe a contribution to the retirement fund, however things are set up. So, but these are your four basics, and that's the ones we're going to concentrate on. There are limits. There are annual limits. So any salary over $117,000 for Social Security, FICA Social Security, anything over that is not subject to tax. So if somebody makes $152,000, their amount that is subject to tax is only $117,000. Up to that. For Medicare, everything, there is no limit on it. It is always taxable in this case. For FUTA and SUTA, which is your unemployment taxes, $7,000. So anything over $7,000 is a tax. That's the limit. So what this problem is asking you to do is to calculate what the yearly employer tax expense is. And this is what the people are being paid. So over here you need to break down how much each salary contributes to this payroll tax. So at $5,500, if you go across the board, it's going to be taxable on all of it. For $65,700, you can see, well, it's going to be taxable here, definitely. It's going to be taxable here, definitely. But it's hit the limit here, so $7,000 and $7,000 only. Well, you do the same thing for 92. Well, it didn't hit the limit, so that's fully taxable. That's fully taxable. That's way over the $7,000, so only $7,000 is going to be in the employer side. Now, this one they've went over, see? So they're going to only pay $117,000 for this Social Security. They'll pay full amount for the Medicare, and again, you're within that limit. So as you go down through here, you compare how much they've made to what the limit is. And that gets added in. When you get all done, you add this up, and you multiply it by the rate. So this one is 6.2%, this one's 1.45%, this one's 0.6%, and this is 5.4%. And then this becomes the amount that the employer has to pay for a payroll tax expense. So that's an additional part of payroll tax or payroll calculations. And this is, here it is broken down out here. So this is just one portion. The employee does not pay any of this. This is all employer. This is a cost of doing business. So that leads us to our next one. And I'm just going to briefly show this to you. This is a complete payroll. And we're going to do this in class together. And I'm probably going to hold it until Monday, next Monday when we do it, and that's what we'll start our first hour off with, is doing a full payroll together so that everybody has time to mull this over. What I would like for you to do is just think about the payroll tax expense, and the calculation, and then look at it. And then also we'll get into the journal entries. I think these, and they're all down here. Let me show you. See, so you have one journal entry for the payroll, and then you have a journal entry for the employer tax expense. So this is quite complex. We'll just hold off on it, and I'll do a whole new video just for it. All right, thank you.